What's up, guys? This is the Financial Dad Podcast, and my name is Gus Robertson. This is my daughter.
I'm JC Robertson.
Hey, and just to kind of hit some highlights on why we do this. So the Financial Dad Podcast came about, so I'm 24 years in the insurance and financial industry. And what I find is, I used to think that people were just dumb. And so, but I don't think that people are dumb. I just think that it's getting to be now where it's like second and third generations, like people that were born in the 70s didn't know. So now their kids didn't know and their grandkids didn't know. And so the point of all this is the reason why I have my daughter with me is because I think getting a 19-year-old's view on it and then I just turned 49, 49-year-old's view on it and how that actually works is and how is why we're doing this. It's strictly educational and to put you in the know so good decisions can be made. So today is the second part of a 3-part series. The first series was just basic. Whenever it comes to insurance, there's 3 categories I like to put things in. So there's the category of what do you own? So it's like your home. The second category is insurance on yourself. And so that could be life, it could be health, it could be long-term care, it could be whatever. But life insurance where you are putting insurance on yourself. The third part is commercial or business insurance. So that's where you're putting insurance on your business. And so today we're going to talk about life insurance. We're going to hit on a couple of health insurance. I don't do a ton of life insurance or health insurance anymore. It's not that I don't want to, it's just that I've spent the last probably 12, 13 years really focusing in on property and casualty and building the investment portfolio of my clients within my company. I want to be able to sell it at some point and or give it, And so, but today we're going to hit on the different types of life insurance, and this comes from my view of what people should have life insurance. I believe that life insurance is the foundation product for all financial success. And there's
When
a
do you
reason.
believe is the right time for someone to get life insurance?
That's a great question. That should have led with that one. And so I believe that as a dad, I would say that whenever you are financially responsible for another person is when you should buy life insurance.
Okay, so there's no point in let's say a 25-year-old couple who just got married that's getting into everything to get life insurance.
Absolutely. They should be the first people to buy. The person that should not buy life insurance
Someone my age.
is a 19-year-old who's in college, who, unless I was wanting to pay for it, but the basis of all life insurance is how it should be, is who would be affected if you were to pass away. Not emotionally. Take emotion out of it. Completely take. So it's
about who you want to be in a good place if you're not here.
Who would be in a bad place financially if you were not here? So look at it from that viewpoint. So let's just say you went out at 20 years old, still in college, right? And you bought a duplex.
Okay.
And now you're on the hook for $250,000 or whatever, right? Now you should have a insurance policy to cover that debt. Okay. And so as a single person, then, or even a married couple, but whenever you get married or you're in a relationship where you are financially tied to one another, so like a husband and wife, let's just go with the basics. If the husband passes away, even though they may not have kids, if the husband passes away, they built a life together that was based off of 2 incomes. And so now the husband should get a life insurance policy on himself to somewhat cover the loss of his income and vice versa. Okay. And so that is the basics of who needs life insurance. So then you keep going and you go into, well, now a husband and wife or a couple or whatever bought a home. So now you're truly in debt, or you buy a car, or who would be financially on the hook if you passed away, if you died. And then you bring kids into it, and then you bring even more debt. But that's what it's for. Is again, it's not really debt. It is loss of income, is what you're trying to ensure. And so today we're going to go over what I believe is the foundation of all financial plans is life insurance. I believe in my 24 years of experience and I will go back and I will hit on what we went over in the first episode. Who can you buy life insurance from? There's a ton of online companies, but again, those online companies are a brokerage, okay? And so, meaning they are independent. And so all you got to do is...
So you would compare them to like what you do?
To me.
Okay.
Yeah, it's the same money, same cost. You're not paying less. But there's two types of ways to buy all insurance. You can either buy it from a captive agent who works for a company that sells their products.
Okay.
And most of the time they only have one company that they can write through.
Okay.
And so, or like for me, what I do is I put in all of your information. So like if you called me, let's say you're 30 years old. Mm-hmm. You call me and I put in your name, put in your date of birth, ask you a few questions and everything, and it gives me the top 50 companies in the United States or that do business in North Carolina, because every state is different. Who can do business in that state, things like that. And it gives me a premium, and that is your premium. Now that premium is solely based off of what you tell me your health is. And so there's that, but we'll get into that a little bit further. But I believe that the foundation for all financial, starting out your financial well-being, your freedom and peace is what I like to call it, is a solid life insurance plan. And the cheaper the better. A lot of people, I'm sure that a lot of people will.
Now, why is that the case for this? Because I know with auto and home, the cheaper the better, or cheaper is not normally better. So why would that be better for life insurance?
Well, life insurance is not, so life insurance is totally based off of your age and your health and the amount of insurance that you want. So if they're all created equal, meaning that the quote that you get is coming from all companies that are number one, they're A-rated. So A-rated just means that they're a good quality company.
Okay.
Okay. As well as...
Does it go like A, B, C?
A, B, C.
Okay.
And so, but with home and auto, your rates can change every 6 months or a year. With life insurance, depending upon the type of product that you bought, so let's say you did a 30-year policy, your rates are stuck for 30 years.
Okay.
In the type of product that I suggest to people. And this is the same thing that Dave Ramsey.
So if your income increases, why would your policy not?
Because you bought based off of what you wanted at the time. It's not about future.
Okay.
And so I'll tell you what I did. So I believe it's not cheap. So don't think that I'm saying that a cheap insurance policy. I want to pay the least amount that I can to get the most that covers what I want to cover. Okay?
Okay.
So what I did whenever I think I was 30. So I did, of course, and because of how I was coached by the companies that I was working for at the time, I've had every type of life insurance policy. I've had whole life. I've had universal life. I've had term. I've had return of premium. I've had them all because I was coached by the companies that I worked with at the time that those were great policies. And here's what I found. They're all trash. They are. The only because...
So there's no winning.
Well, the only one that you truly need if you're trying to create a financial plan. Number one, I will say the life insurance policy, my default statement here. The life insurance policy that is in effect when you die is the best life insurance policy that you ever took out, no matter what type of life insurance it is. But if you're trying to create a financial plan, let's go back to the two types. So you can buy a policy through an independent brokerage like mine, or you can buy it from a captive company. The difference is that the captive company is going to give you one quote.
Okay.
The independent is going to give you as many quotes as you want. I can give you 50 different premiums, and then inside of that, your rate that you pay is totally based on your age, your health, and the amount. That's it.
Okay.
That's all it's based on. And the rate, depending upon the length of the term that you get, your rate is basically, I call it stuck in stone. It is stuck in stone for that time period. Okay?
Okay.
And so, hold on, I lost my train of thought. The reason why I believe that, number one, Dave Ramsey, most financial planners will tell you this. And the reason why financial planners tell you this is because they're also selling you something else that they want you to be able to put the most money in.
Okay.
There's not a lot of commission in term insurance. So think about it from a selling point of view. If you go to a insurance agent, he can only sell you term, whole life, or universal life, right? Mm-hmm. What do you think that he is going to sell you or push you towards? Let's say, and again, my default statement, if you get pissed off with what I'm saying, more than likely you are pushing a product that you make the most commission on, right? And so if I told you...
Because they're not going to push a product that they're not going to make the most money on, even if that's not what's best for the person.
You would hope that they push the product that is best for the client's financial future.
That's not the case.
Well, it's not the case a lot of times because they're not concerned with the client's financial future. So this podcast is basically on Financial Dad Podcast. We're trying to lead people to freedom and peace through financial education.
Okay.
And so if you look at, I'll give you an example. Let's fast forward 5 years. You're 25 years old. Mm-hmm. I would say, JC, you need to either do a $500,000 policy or $1 million policy because I know what your future is in regards to ownership of stuff. Mm-hmm. Okay? I also know that I want you to capitalize on your healthy rate at 25 years old. 25.
What does that mean?
I want you to be able to capitalize on the rate that you are going to pay at 25 years old.
Okay.
So let's just say $1 million policy, round numbers, $1 million. And it's a 30-year policy. So it's going to take you all the way to 55.
Okay.
And you're going to pay the same rate. It might be $20 a month. So the commission that is paid on most insurance policies are based on the first year annual premium.
Okay.
And so the reason why I'm going into this is that let's say your premium is $20.
Okay. That's
$240 for the whole year. Might make $240. It's not a lot of money. Mm-mm. Okay. But if I convince you to do a $300 a month policy, and that was $3,600 a year, and I made $3,600, what am I going to push? So you have to call into question. So anybody that's buying life insurance, number one, it is my belief, and this is a lot of belief, and it depends on if you're a financial planner or if you have a dog in the fight in regards to what that person does with their extra money, then you're going to push that person to do. It depends on if you have a fiduciary type of relationship, meaning that you're going to do the best for that client.
That's such a weird word.
Yeah. So you want to do what is best for the client regardless of the money that is made. And so I look at, and plus I don't have to sell life insurance. Mm-hmm. So I like selling life insurance because it is, again, the basis of all financial plans. But point being, you should take out the cheapest life insurance policy that you can for the longest period of time that you can, which right now is 30 years. It's probably going to move to 40 years pretty soon, depending upon your age.
After that 30 to 40 years, do you get another one?
I have an answer to that.
Okay.
And so, and then you have more. The reason why I say take out a cheap term 30-year policy is because it leaves more money to put towards investing in your future, giving you freedom and peace. I would say as examples that the reason why I say that is because whole life insurance is expensive. Universal life insurance policies are sold completely the wrong way.
And what's the difference between whole life insurance and universal life insurance?
So going back, so term insurance is sold for a specific length of time. It's for a term.
Okay.
So most of the time you'll see it like there's annual terms, and then there's 5, 10, 15, 20, 25, 30-year terms.
Okay.
No matter what you choose, you don't want the premium to change within that term.
Okay.
And so, and then
and what if it does? Or it's just not supposed to?
We'll talk about that in a few minutes, but you want to buy a policy that does not change it in that term, where the premium doesn't change.
Okay.
Whole life insurance is basically the basics of it. It will last your whole life.
Okay.
And so
the term is until you die.
Well, it's not until you die, but let's just say your whole life. Most of them cap out at age 100.
Okay.
Okay. And so sometimes they're moving to 120, but let's just keep it simple and say that you at 19 years old could get a whole life insurance policy that lasts your entire life. The issue is that was great 50 years ago, because you could go buy a $50,000 whole life insurance policy and it would pay off your home. It would, because inflation wasn't so rampant right now. So the whole life insurance for an adult is expensive. Now you'll see, so I'm not talking about kids, or I'm not going to get into that, because you'll have a lot of people that have, like my wife has a $15,000 whole life insurance policy that her parents bought her when she was 1, and it's $73 a year. Things like that. Okay, well, cool. If you want to put a whole life insurance policy on your kid, and but you're not really concerned about their financial freedom at that point. Mm-hmm. So whatever floats your boat. I find that what I'm talking about is people who are trying to create a financial plan. That's what we're talking about. And so I believe that you should buy the cheapest term policy that you can afford with the maximum death benefit and the longest period of time.
Okay. Because
what you don't want to do is, a whole life insurance policy is only as good as you're able to pay the premium. What I believe that companies are capitalizing on is people's fear of needing life insurance because they have no financial plan, needing life insurance later on in life, like 50s, 60s, 70s, 80s, and then having no life insurance. But if you have a financial plan and you stay on that path somewhat, then you won't have a need for life insurance later on at that great of amount.
Okay.
So universal life insurance is basically a play on, it's a combination of term and permanent insurance. Can't say whole life. It's a play. And it's I think right now it's the most widely abused insurance.
Why is that?
Well, you hear things like infinite banking. You hear things about borrowing against it to go buy something, and because the interest rate. And here's my view on that. Again, this is going to upset a lot of people. If all life insurance products are on this table, and let's say they're like chess pieces, right?
Okay.
So they're like this, and there's 20 different products that you can buy in regards to life insurance.
Okay.
And I looked at you and I asked you specific questions. Well, don't you don't want to waste your money? Don't you want a policy that if you put $1 in, some will come out for the insurance, but based off of your age, But let's say 20 cent came out for the cost of insurance. Don't you want that 80 cent to sit in there and earn interest? Yes.
Yes.
Next thing you know, you're saying yes. Next thing you know, at 25 years old, when you're not married, you don't have a kid, you don't have a lot of expenses, now you're sitting there with a $200 a month life insurance policy. And 2 years later, you don't even remember what you bought. A year later, you don't even remember what you bought. All you know is it's $200. Then 5 years later, you're 30. You've got a house. Mm-hmm. You might be married. You might have a kid. Now that $200 a month becomes a burden. And now you have to cancel the policy because you can't afford the $200. Now that cash value that they're preaching about inside of the policy is penalized because you cancel the policy. And so it just becomes it becomes a burden, is what I found. Over the last 24 years, I have never, and I would say over the last 24 years, I have probably met with at least 5,000 people, easily. There was a time whenever I was so heavy into life insurance, I was probably, at first, like whenever you were born, I was probably meeting with 20 people a week about life insurance. And what I found across the board, no matter who I met with, is people were taking out life insurance policies, like whole life, mm-hmm. universal life, in their 20s and 30s. But whenever they got to their 30s and 40s, it became unaffordable, or they did not want to pay for it anymore. And so that taught me a lesson that a lot of whole life insurance policy and universal life insurance policy is sold
out of fear.
It's fear buying. It's based off of fear that's being preached. But I also look at it this way, and I'll say this directly to the camera. If you are selling a product to the public and that is the only product that you have, if you're not giving the client options and choices, then you're bad at your job. Yeah, you really are. You're capitalizing on people's fear, and that is not fair to the client. You're looking at the commission that you can make off of somebody instead of giving them options. I believe that if everybody was given an option, they would all buy. Now we're talking about working adults. Mm-hmm. We're not talking about kids, and we're not talking about people who are unhealthy and don't have a choice. So I was I was in a group Zoom about 2 months ago, and I put these views out there. Same thing as and Dave Ramsey catches hell about this view, because then people are, well, what about kids? Well, cool, buy your kid a whole life policy if you want to do. And what about people who are unhealthy and can't get anything but guaranteed life insurance, which is whole life? And take those two people out of the equation and now set people on a true financial freedom and peace plan. And let's say that's a 30 or 40 year window. And they should buy the cheapest term policy that they can. And then what do? And so for me, let's say I bought my first insurance policy, term insurance policies when I was 30. What I did is every 2 years I bought another one. So
you had more than one.
Well, I do now, but let's just say the reason why I did that is so at 30 years old, I took out $1 million policy. Okay. So it'll last until I'm 60.
Okay.
At 32, I took out another $1 million policy that would last until I'm 62. Mm-hmm. So if I wanted to cancel the other one, I could. So then I think I waited until I was 38. And I bought another $1 million policy that would last until I was 68. So I canceled the first one. Now I have.
Is there a benefit to having more than one active at the same time? So not canceling it?
It just depends on what's going on in your life.
Okay.
So the reason why I did it, so the first one I bought was, of course, were for you and your sister. And so the second one that I bought was because of business needs to pay off those debts. And then I got married. And so I had I had that need, and then we bought our house. And so it was the needs changed to think your needs are going to always stay the same, that's just.
So is that where people get caught up in this, is keeping the same one and not getting another one and adding their new obligations?
I think there's two mistakes that people made. Is you need to be sitting down with somebody every 2 years to put yourself in the know. Every 2 years, you need to be looking at your financial plan. And your financial plan, the number one thing on your financial plan, how about this? What is the number one thing in people's wills?
Their kids.
Well, besides that, the very first line is, how much life insurance do you have and who is it with? It's the number one thing, because it's the go-to. Do you have life insurance in your will? Yeah, we have life insurance. Well, who is it with? What's the policy number? How much is it? Who do we call to file a claim? It's not about debts. It's not about cash. It's not about anything. It's about life insurance. So that should tell you something, that on all financial plans begins with life insurance. And so if you are looking, I will keep saying this, it's unreasonable for people to be paying a ridiculous amount for life insurance, because it takes away from your ability to, it becomes a bill. It's a huge bill. So
I was actually going to pop in here for a second.
Okay.
Just to make sure I'm understanding this, you're saying you want people to have a cheaper life insurance policy, or the cheapest term life insurance policy they can get.
Yes.
The way I'm saying this is, it's because that's your plan B. That's like if everything goes wrong and you die.
Well,
then that
not
pays
if
out.
everything goes wrong.
Well, I'm saying, like,
if you die.
Right.
Yes.
Well, I'm saying you do the cheapest so that with the rest of your income you can invest and have money that could take care of big expenses. What am I trying to say here? I have something here.
You can do it.
The answer is
You
yes.
can do it.
What you're saying
I'm trying
is yes.
to say you
You
want
sound like me
the
right now.
cheapest life insurance policy so that it doesn't become a burden for you planning your actual future.
That's right.
Okay. Did that make sense?
Yes.
Okay, I'm gone now. Bye.
That's what I was trying to get at over there. That's what I was trying
let me go.
to
I'll
get
go
at.
back and I'll clean that up. Life insurance. The reason why I think you should spend the least amount that not the least amount. It needs to be the amount that would take to replace your income over a certain length of time and handle the responsibilities. So I'll break this down for you. So just husband and wife, house. Let's say the husband's income is $100,000 a year.
Okay.
They bought that house based off of, let's say 50% or 100%.
So
or
their
25%.
shared income.
Their shared income, let's say for example, he's making $100,000, she's making $100,000. This is pre-kids. They buy the house. House is $300,000. But there's also income need there, not just the house. So I always told people this: you take out a $300,000 policy and you pass away. Well, now your spouse has to make a choice. Do I pay off the house and have a paid for house but no income? You see? Mm-hmm. So his income or her income that was bringing to the home, if you don't replace that income with life insurance, then what are you going to have? So there'll be like an acclimation period. So it's like 10 years. I forget the terminology, but like the rule of thumb is this: if you're making $100,000 a year and you're married, I believe that you should have a 10-year window of income, so $1 million.
Okay.
So that $1 million should be able...
Over 10 years?
No, $1 million policy.
Okay.
$1 million 30-year term policy
Okay.
for as cheap as your health and age can get it. That's it.
Okay.
That's all you need.
Because your health can affect the premium.
That's
Okay.
right. Yeah, because all life insurance is based off of age, health, and amount. That's it. Age, health, and amount. That's it. And health goes into like different things. Do you smoke? Have you had issues in the past? Do you have heart disease? Do you have cholesterol issues? Do you have, diabetes? All of that plays into it. But that's with all insurance, whether or not it's term, universal, or it's all based off of age, health, and amount.
Okay.
But the point of it is, what Kyle was asking a while ago is that, okay, well, you spend the least amount that you can on life insurance so you can invest the rest. No, I'll say no to that.
Okay.
You spend the least amount that you can on life insurance because, number one, just least is not a bad word. You're just not spending the most.
I would say that's definitely circumstantial, though.
Well, yes, everything is based off of how much you actually need. You might only need $100,000, but the point of it is that you're not burdening yourself with a staple expense like a car payment. So imagine this. Imagine that your universal life payment is so let's say somebody convinces you to buy a universal, and it would be a convincing. If you did not know what I know and have met with people who are so distraught about their universal life policy, I think that a lot of times, especially on social media, I see people pushing universal life. Become your own bank. It's the stupidest thing I've ever heard of. I could rail into these people. Number one, if it's the only product that you have to sell, if that's it, if you have one chess piece that you can sell out of the 100, then you're not a good financial planner. That's it. You're not educating people. You're forcing people to buy what you are pushing because it's the only thing that you have to sell. That does not make it good for people. And so becoming your own bank, people can't even save $1,000. How are they going to be their own bank?
What do you mean by being your own bank?
Well, it's called infinite banking. So people are using universal life right now as be your own bank because you can borrow against it.
Okay.
And so right now, it's just a universal life policy.
Okay.
But it's called, people are like pushing be your own bank. That's what's called infinite banking, to where you put these huge lump sums of money in week after week after week. And it's crazy because when you see it, and it's not for everybody. You're looking for people, they are looking for people with disposable income and people who have a love life insurance.
Can you give an example of disposable income?
People who have an overabundance of money and don't know what to do with it. Okay. That's disposable income.
Okay.
It's disposable only in that minute in time, meaning that they're not looking 3, 5, 10 years down the road, which is the basis of a financial plan, is in staying on the path. So like if I was able to look in, I don't know, if I was able to tell you what to do and you listen to me, I would say over the next 30 years, or let's take Kyle because he's got a kid, okay? This is what Kyle should do. Just on the brief conversations that he and I have had, he and his wife, they have a house.
Okay.
They have
a daughter.
Future goals. They have a kid. So what Kyle should do is develop a financial plan, super basic. Hey, right now, we're going to make X.
Okay.
We're going to spend Y, and we are going to invest, if they can, they're going to invest this. And you know what? Just in case something happens to me or you, I don't want to leave you in a bad spot along with the inability to live life right now until you figure it out. That's it.
Okay.
And so I can say that because I have met with so many people like him, I would say $1 million policy, super cheap comparatively. It's super cheap.
Noted.
Yeah. $1 million policy for both he and his wife.
Okay.
And
so they should each have one.
Oh yeah, absolutely.
Okay.
Because, so this comes into, and it's the most ridiculous thing. Well, if my wife dies, I'm going to be okay. No, dude, you are not going to be okay. Because now you are financially responsible for a kid, for daycare, for a car.
Cleaning.
Laundry. Food.
Grocery
taking
shopping,
here from there.
Gas.
That takes money. Whenever I hear a man say, oh, well, I'm going to be financially okay, that is ridiculous. That's ego and pride. And so, now, both people don't need equal amounts, but it does need to be a well thought out plan, but as simplistic as possible. It's not difficult. This is not rocket science. I would say that it's an education thing. I would say that a lot of people don't understand the value of having a very simple life insurance plan. They're overly insured. I meet with people all the time, or used to, I don't really do it now, who have 5 or 6 different types of life insurance plans and 0 savings. None.
And why is that bad?
I think because as a parent, you want to leave your children better off than how you were raised. I think that this comes back to like the education part of it. I find that a lot of older adults, they didn't save. And so how do you go and how can I go pay the minimal amount to leave you better off? Insurance, right? Mm-hmm. So I can go spend $50 and leave you $50,000, as an example.
Okay.
And so that's the mentality, because people didn't plan earlier. And so I think that a lot of older adults, they believe in whole life insurance because they can't buy term anymore. See, term ages out.
Okay.
And
Can you buy term again once it does age out?
Okay, so I understand what you're saying.
Meaning, like at the end of 30 years, that term's over. Can you go and buy another term policy?
If your age allows it.
Okay.
And so, like if you're 30, right? Mm-hmm. And you buy a policy and you're 60.
Okay.
Okay? And so, what if your health and finances don't allow you to buy a policy at 61?
Okay. So you don't buy another one, if that is the case.
Well, this depends. It depends on if your age and health and finances allows it.
Okay.
So, again, hitting some highlights about today is the goal for all financial plans is freedom and peace. It's not a dollar amount. It's truly not a dollar amount. Everything is relative to what a person. So if you're making $80,000 today and you're retiring in 5 years, it's not going to be that much different. And so, but the foundation of all financial plans is life insurance. And so, do you always need life insurance? No, you don't always need life insurance. The only reason why you really need life insurance is if somebody is on the hook if you were to pass away. And so, just to kind of like go over a couple things. So I believe that a person inside of their financial plan should buy the least expensive, I'm not going to say cheapest, the least expensive life insurance policy that they can, based off of their health and their need at the time. And again, if you're young enough, you can rotate those policies out every 2 to 3 years, 5 years or so, based off of your health. I do not believe that the average working adult needs whole life insurance or universal life insurance. It is a huge expense that most people cannot afford long term. But hey guys, appreciate you being with us today. And this was part 2 of our series. The next episode will be just talking about going over commercial insurance, general liability, workers' comp, and some commercial auto. But appreciate you. If you have any comments, you can leave it at or send it to financialdadpodcast@gmail.com or make a comment in the comments. Appreciate you.
Thank you.